Yeah, that's what I love, because your first-time investor, right? They're typically focused on the single family, maybe duplex up to fourplex. And then you're, again, like we talked about, the larger hedge funds, big firms are focused on the big. So there really is this niche that we've found is just a sweet spot. There's just really good deals. There's a lot of opportunity, less competition. Yeah, and it's a great entry point.
This video is brought to you by Fast Track, a partner program where Jerry Norton will fund your deals and mentor you. Learn more at fasttrackwithjerry.com.
Awesome. Well, Clayton, thanks for sitting down with me and doing this interview. I've known a lot about you. I think we maybe met for a minute one other time. And so I'm excited to kind of sit down and do this interview video with you. And the topic we're going to be talking about is really a fascinating topic. I love talking about how you can progress from, where you start out into other bigger things. And as a wholesaler and an active flipper still, what's been exciting is the path you've kind of been focusing on is multifamily.
Yeah.
And so let's talk a little bit about that. What's the process been like for you, first of all, to transition from single family wholesaling flips into now commercial multifamily and that process a little bit? Because Clayton, I don't know if you know, but a lot of the people listening, they're wholesalers. A lot of them are working on that first deal. Some of them are flippers, but bigger picture, I think most people want to continue to progress in their business. Yeah. And so what's that look like for you?
Yeah, great question. I started out probably like most of your audience and you yourself. We started flipping homes back, a decade ago. Mm-hmm. That was going great, started building that. And actually the first property I ever bought for myself, me and my wife, was a triplex. Oh. So we wanted to live somewhere. We were looking at, hey, how could we save cost? We found this property that was, super cheap back in the day, just after, the recession. So we ended up buying that, living there basically for free. And so that's really what kind of clicked for me. I was like, holy cow, I can house hack. I can live here. I can rent these other units out and live for free. So that's what really started getting the wheels turning. And so at the time I had a goal of hey, I want to buy another rental per year. And at the time it was like duplex, triplex, fourplex type properties, right? Smaller multifamily. And so that was kind of my goal at the time. It's just every year if I could find a way to buy one of these and just rent them out, right? So that's kind of where I started.
Good long-term goal, one a year.
Yeah. And really what the catalyst was for me to really jumpstart it into hey, let's exponentially grow this and compound this more than just one a year, was when I started getting my tax bills. I was making decent money as a flipper, right?
You're speaking my language now. Tax management is
your thing. Yeah. So but as you scale and grow, that's a real thing that, you start looking at that tax bill, you're like, holy cow, I've worked a third of my year just to pay to the government.
Especially if you're wholesaling and flipping, because you're going to be in the highest tax bracket because that's ordinary income.
Exactly. So that's when I started learning about, cost segs and depreciation and all these benefits that owning real estate, not just residential, but larger commercial, it just compounds the amount of depreciation you can take and offsets your taxes. So, it was after a year, I wrote a huge check to the government. I'm like, this is it. This is the last time I want to do this. There's got to be another way, right? So that's kind of what got the wheels turning. And at the time, I'd already been buying a few, duplexes, fourplexes type things. And I was like, you know what? I think I can scale this and grow bigger. And really, I think the hesitation that a lot of people have is when they think about buying multifamily, it's scary. It's unattainable. You see these big firms and guys that have huge teams and they've got CPAs, they've got accountants on staff. It's it can get overwhelming. It's this is for a corporate job. This is something bigger than I could ever accomplish.
People think of the Grant Cardones and the Ken McElroys where they get, they do these placements and do these 1,000 doors on one deal type of thing. Yeah. And it feels like way out there.
Yeah, exactly. And so I think that's what stops a lot of people. In fact, a lot of my students and a lot of people that I mentor, that's where they're stuck, is they're like, hey, I want to do this, but this is just too much. It's just too big. And so that's why I kind of focus on, and where we've specialized in is the smaller to mid-size multifamily.
Typical units are what?
So anywhere from 10 to 30 units.
Okay, yeah.
So that is much more attainable, and honestly, it's a lot easier to break into that as opposed to going out and saying, okay, I'm going to go buy a 500 unit apartment complex.
Would you say
that's
there's
a huge jump?
Would you say there's also less competition because the big fish don't want the 30 units, they want the multi-hundred units?
Exactly, yeah. So you kind of fall into this place where you can still find good deals because a lot of the operators are still mom and pop type owners, right? They're retired landlords, just like you would get in a single family, wholesaling, or you're out marketing. It's the same kind of owners, and they're not very sophisticated like hedge funds that are buying these bigger, properties that they're not going to sell for a discount. So in my mind, you can actually find good deals still, right? There's still good deals out there. You can still negotiate, and they're a lot more attainable financing wise. You don't have to raise as much money. Anyways, so that's why I kind of pitch like, hey, start with the smaller to mid-sized multifamily. Start learning that, and then that will kind of propel you into larger deals.
Yeah, I love that. I want to take a second here and just kind of talk a little bit about multifamily and kind of the investing strategy. And correct me if I'm wrong, but I look at kind of like three big things with buying and holding. I guess this applies with single family, but especially multifamily. You've got appreciation, meaning, hopefully over time it's worth more. Yeah. And if I've got debt in place, hopefully over time, as that debt gets paid down, my equity grows, yeah. Right? So you got that appreciation and equity. You've got cash flow, which is what most people think of. They think of, okay, I'm going to buy multifamily, the whole Robert Kiyosaki, right? I'm going to, when my income exceeds my expenses, I'm free. Yeah. And so a lot of people look at the cash flow, but that depreciation that you touched on for a second is the third one. And for some people, for me, and at the place you're at, where you're actively flipping over here, making all this high income, puts you in these super high tax brackets. Not only are you then with multifamily capitalizing on the appreciation and equity and the cash flow, but also this big depreciation write-off. And what the government, if you don't know what the government allows you to do, the IRS says, we will let you expense a portion of your total asset over time because it's going to wear out. Yeah. And that now becomes a non-cash write-off on your tax return, which can become huge. In fact, it can become the most important part of the whole asset. Yeah. Is because now instead of hitting the 50% tax bracket or the 40-some tax bracket, you could reduce that quite a bit, yeah. Which is the same as money in your pocket. Oh yeah. Right? Exactly. And so people need to be thinking about, as you grow and develop your business, maybe it's not such a concern now, but I wish, maybe you think this way, I wish I would have started a whole lot earlier planning for tax management, that would be coming down the road. I just didn't. Yeah. Until it became a problem where I'm writing these massive checks like you, and now it's like, okay, what am I going to do about this? I can't keep doing this.
Exactly. Right? Yeah, that's so true. And even a lot of the investors that invest with us, they're not even as concerned so much with the cash flow and obviously that's great. They want a good return, but it's more about, hey, I'm facing I'm going to be writing $1 million check to the government. How do I offset that? Right. Yeah. So it's either you give that money away or you go buy more assets that are going to keep appreciating, you all that, right? So yeah, when you look at it as a whole, from a whole strategy, it's amazing what commercial, it can be multifamily, it can be office, retail. It doesn't have to be multifamily, but when you invest in real estate, right, there's just so many benefits as opposed to other investment vehicles.
Yeah, and Clayton, this is a very relevant conversation for me because rather than go the acquire assets route like you're doing, I moved to Puerto Rico and took advantage of their big tax incentive. But that's a window of time. At some point, we're gonna come back to mainland. I'm gonna fall back into the same tax brackets. Yeah. And so learning and planning and starting to acquire assets similar to like what you're doing is gonna have to be a big priority. There's no way around it. Unless you're okay paying 50% of your income to the government, which most people aren't. Yeah. So I love what you're talking about here, where you've kind of created a niche in this kind of pocket of multifamily that's under the radar for the big dogs, but yet it's not so slow that it's a duplex at a time. Yeah. It's kind of hitting that, mid-range of 30 unit type of properties. Yep. Are you able to leverage some creative finance on some of your deals?
Oh yeah. Yeah, definitely. And that's the beautiful thing too, is
because it's mom and pop, so they're going to be open to it.
Mom and pop owners. A lot of the deals we've had have been creative finance, right? And that's the thing. It's more similar to single family type investing, right? And a lot of people don't think that. They're like, oh, well, it's it's 5+ units, it's commercial, like it's kind of out of reach, but it's actually very similar. Same concepts, same underwriting strategies. You're just adding a few different things, but yeah, that's what I love, because your first time investor, right? They're typically focused on the single family, maybe duplex up to fourplex. And then you're, again, like we talked about, the larger hedge funds, big firms are focused on the big. So there really is this niche that we've found is just a sweet spot.
It's just a wide open
really
opportunity.
Good deals. There's a lot of opportunity, less competition. Yeah, and it's a great entry point.
Would you recommend for newer investors that are just getting started to start like with what you did and do the 2, 3, and 4 unit and maybe get a little bit of experience there? Or are you thinking people could jump right into the 10, 20, 30 unit type of deals?
Yeah, that's a great question. I believe people can jump right in to the larger deals. And if that sounds scary, right? There's ways to do it where you can mitigate risk and leverage the experience of other people, right? So like a lot of our students or a lot of people I mentor, that's the same question they have. It's like, well, how do I do this? It's like, well, hey, if you find a deal or if you talk to a seller of one of these types of properties, bring it to us, bring it to someone like us, right? They can help walk you through the numbers, can help you look at the underwriting in a simple manner.
Maybe even partner
with you on the deal.
Yeah,
exactly.
Maybe
right?
partner or bring equity or bring something to the table. At least experience on how to structure.
Yep.
It's interesting you say that because I like to use the same analogy back with single family in price point. So what I'll tell people is it's just as much work to do a home that's got an ARV of 150,000 as it is a home with a 600,000 ARV, right? It's still a contractor, it's still a kitchen, it's still paint and carpet, right? Yeah. But yet you're gaining so much more, you're getting 3-4 times the profit on that deal, yet it's the same time, energy, and effort and work. I think what you're saying is doing a duplex or doing a 30 unit, there's not a whole lot different in putting a deal together and doing a deal.
Just more zeros at the end.
Just more capital.
Really what it is, yeah.
Yep. It's still property management, it's still kitchens and baths.
And if anything, I mean, we haven't touched on this, but like the financing piece is actually a lot easier. Like when I was buying duplexes, fourplexes, like that was like, pulling teeth.
Brain damage.
Right, you're doing tax returns, they're combing through every financial, your whole history, right? But when you get into the commercial loan side, it's a lot easier. And it's endless. Like there's no cap on how many loans you can get, where conventional loans, you're capped at 10. So
that's because the asset stands on its own.
Exactly.
Whereas 1 to 4 units, they're looking at your personal income.
And it doesn't go in your personal credit, right? There's no personal guarantees. I mean, it really opens up a whole nother world of like, wow, this is actually a lot simpler than I thought it was when I was just buying duplexes, fourplexes.
Yeah, and so what's your goal? Do you have a number of doors goal, or are you just taking it as they come?
Great question. Yeah. So my goal this year was to buy 1,000 doors.
Okay. So that's a big goal.
It is a big goal. It's a big, hairy, audacious goal.
Yeah.
But, hey,
how do you feel like you're doing?
We're getting
on track?
there. Yeah, we're under contract on about 230 doors now, and we already own about 300 doors. So I think we'll get close to that.
Yeah. That's amazing. That's really phenomenal. Thank you. So congratulations on all your success. Guys, leave a comment and say, Clayton, you're a flipping genius or a multifamily genius. But I love this conversation because, I think people listening right now, wherever you're at, you want to be thinking about how can I continually progress, right? Yeah. What does it look like to go to the next step for me? And you've done the same thing which I've done, which is you've taken wholesaling, which has been your backbone and your roots, and you said, how can I use this as a stepping stone, right, to get into other things? Yep. And your route you're doing right now is multifamily. And isn't it exciting to think back to like when you started wholesaling to this progression you've gone into now to doing 1,000 doors this year in multifamily? It's pretty crazy.
It's amazing, and I mean, I've seen videos like this all the time where even people you've interviewed and you yourself, I think the audience can view that and say, oh well, these guys are different. Yeah. Right? These guys have something I don't have.
Of course, Clayton can do it.
Yeah, of course he can do it. He's got the network, or he's got the history. No, I'm just as regular as any other person. Mm-hmm. But it really just comes down to focus and discipline, right? Yeah. Like, if that's what you want, you have to just work every day in some direction to move that needle a little bit closer to what you want. Whether that's learning new skills, watching YouTube, following Jerry here. So it's really more attainable than I think most people think. Yeah. But most people just give up before they even start. Right.
Yeah, great advice. Love that. So guys, I'm going to put Clayton's some information below in the description. So I know you're putting out a lot of content. You're helping people learn how to do some of these things so that you can follow Clayton. Definitely get in his world. He's doing some amazing things. It's exciting to see all that you're doing. And I'm just happy to be a part a little bit of your world and get to see some of that. It's great. And keep doing what you're doing. Keep inspiring people and changing the world one door at a time.
No, man, I'm bound down to you. You are the master. So yeah, Jerry knows what he's talking about.
Thank you. And honestly, the opportunity with rental right now, I mean, I know you know this, but the demand for rentals is just going to continue to skyrocket because of interest rates and prices being as high as they are. So many people have to continue renting, and that demand is just huge.
Oh yeah.
It's so underserved.
And it's such a safe asset, right? People always need a place to live. Right?
Yeah.
So yeah, I think
it's a great strategy, great place to go. Guys, tear it up. If you haven't yet, be sure to subscribe to the channel. And again, thank you, Clayton, for being here and all you do. And we'll see you on the next video.